Alright, guys, so let's talk about the US and China today. The trade war is not over, but it seems that Trump doesn't have any limit left to escalate. Everything is slipping through his fingers. Now, the Russia US summit didn't yield anything. Putin still doesn't want to meet with Zelensky. So, the Eastern Front, the economic pain is not done yet. And in a bigger blow against the US, Russia is not afraid of Trump's tariff war on the world. The majority of crude shipments, almost 3 million barrels a day, are still being sent to India and China. Now, Trump has sanctioned India with an additional 25% tariff, but their exports can always be diverted elsewhere. They can sell to BRICS, especially the Chinese market. Furthermore, China is just too big to sanction. Now, hitting China with big secondary tariffs will backfire in a really nasty way. Now, the blowback on US companies within China itself will be legendary. Now, we can remember Bessent and Trump threatening China, cutting Russian revenues. That is the official excuse, but the real reason is to remove a big competitive advantage Chinese industries have. Now, if you take away cheap oil and gas, then Chinese manufacturing will cost more, the production of chemicals and plastics will also become more expensive. But after everything, Bessent has given up. He's now sounding like the spokesman of China, trying to justify China's oil purchases, and the crosshair is now firmly pointed at India.
China importing it is suboptimal, but if you go back and look pre-22, pre-invasion, 13% of China's oil was already coming from Russia. Now it's 16. So China has a diversified input of their oil. India is just profiteering, or they are just profiteering. They are reselling. They've made 16 billion in excess profits. Some of the richest families in India. So this is a completely different thing.
So this is a direct admission that the trade war with China has failed. Everyone here knows this. We have been saying this for weeks and for months, that everything has been a big performance by Trump and Bessent. Well, the Kabuki theater show is over, the showdown with China is over, and the US has waved the white flag at least for now. And listen to this excuse. According to Scott, the China tariff status quo is actually working pretty well. That's code for saying the US, their house of cards is still standing, so we shouldn't rock the boat. Now, the justification, however, is simply bizarre. China is the biggest revenue line item in the tariff income, so if it's not broken, don't fix it. Now, I believe that's probably true, but who is paying the tariffs again? It's not the Chinese exporters, it's the American people, US importers. The trade war with China is a big excuse to tax US consumers to subsidize who? The federal government. Now, the US is on a serious back foot here. It's imperative we understand how much sway China actually has on key sectors of the American economy, and it's getting pretty hilarious. Now, a week ago, Trump basically asked China to quadruple their soybean orders, to return to importing US soybeans to help save the American farmer. By now, we know Beijing has bought nearly zero US soybeans and avoided US energy as well. So the pain in these industries, well, they're starting to stack up. Real jobs, they're on the line now. US farmers are one of the worst hit sectors in this tariff war. Now, the cost of new machinery is up by at least 20 to 30%. I've been hearing numbers of 50% or even 80% or more. Labor costs more. Trying to take a loan to grow next year's crop is on par with gambling at a casino. And thanks to the trade war, countries, especially China, they are shunning US goods. There are alternatives out there, cheaper supply that exists within the BRICS bloc itself. Importing from the US is unnecessary. Now, analysts are all mocking Trump's fantasy of China helping them out. Chinese demand used to reach 35 million tons of US soybeans, but Brazil can provide that supply in a heartbeat. Beijing has also planned ahead decades in advance. China doesn't have a shortage. Their state stockpiles are full, and South America can provide everything that they possibly need. And because of that, the entire US soybean sector is on the ropes, their life support. Now, I don't want to make this a lesson in agriculture, but Chinese demand here is significant. China's economy is slowly making the move towards greater consumption. Their middle class is growing, so bringing in more imports, including food, is a very big priority. But because of the trade war plus US China tensions, there's simply zero incentive for Beijing to play ball. They can simply buy their food from BRICS, they can pay in the RMB and avoid using dollars as well. Now, Trump has misplaced his cards, and US farmers are warning him of the end of exports. The numbers are not looking good at all, not in the slightest. And here's the nail in the coffin. Just 2 years back, China bought almost 5 million tons from the US, but today it's zero. And that collapsed the totality of US soybean sales from 10.6 million to under 5 million tons this year. The collapse is greater than 50%. And as we all said, it's because of the trade war. Now, China's tariff and global tariffs on US goods makes them uncompetitive. Trump's own import tariffs are driving costs up for US farmers. So the selling price is also facing an enormous problem. Now, it makes total sense why Bessent is backing down. The US economy needs the help of China to survive and thrive. And this brings us to the big drop in US tech stocks yesterday. Now, it's mission critical to understand how this ties into the China true situation as well. Now, markets yesterday, the Nasdaq tanked by over 2%, and the big narrative or driver was the rate cuts. Will the Federal Reserve cut rates or not? Because if they don't, it creates two massive problems going forward. Now, Bessent will have to flood the markets with bonds at higher yields. Borrowing costs across the board, especially for companies, will rise as well. Secondly, the US debt situation will get worse. Now, the 37 trillion number is just the beginning. We could even hit 38 trillion by the end of the year if this continues. And the message coming out of the Fed is horrific. Now, there's going to be a chance, guys. We won't see aggressive rate cuts unless Trump does the unthinkable. Now, the Fed knows the US economy is in crisis, there's higher inflation and weaker employment, but they are choosing the inflation fight as part of their dual mandate. The majority of 18 policymakers in the Federal Reserve judge inflation as the biggest systemic risk. Translating to English, rates had to stay higher for longer. And this is the reason why tech stocks were collapsing. Nothing too complex, but the over-leveraged companies are starting to fall over. All the hype and all the feel-good vibes just can't last forever in the face of reality. So what does this have to do with China? Well, firstly, what are the biggest drivers of US tech growth today? It's AI. And let's trace through the value chain. What powers AI? Semiconductors. What do you need to make the chips? You need rare earths which comes from China. You cannot afford for that supply to get disrupted, so whether you like it or not, you have to play nice. And here's what we mean. Since the trade truce happened, China has been wrapping up the rare earth exports to the world, and that includes shipments to the United States as well. And these are components needed for fighter jets, electric cars, and to make advanced AI chips as well. Shipments to the US has climbed by an impressive 76% from June, and it was nearly 0% in May, nearly zero in May. Now imagine what would happen to US tech if this collapses down to zero. Will TSMC at Intel factories get the inputs they need? If Chinese rare earths stop flowing to the Arizona desert, do you think US tech stocks will fly up or crash down? So we cannot underestimate the Chinese variable in this equation. All Beijing needs to do is to pull the plug on rare earth supply, and this technology crash will get worse, especially when you combine this with the Fed not cutting rates, at least not aggressively. But let's take a trip all the way to Tokyo. Now, things are getting so bad in Japan that we have to cover it now. The entire country is a pin drop away from a recession. And it's simple to understand. They have failed to diversify their trade, and now the tariff war is hammering them like never before. It's not looking good at all for Japan. Now, exports from Japan has fallen the most in 4 years. It's a 2.6% crash in value, with the downturn led by cars, auto parts, and steel. And those three categories sounds familiar, don't they? They are all goods under heavy US tariffs, and Japan is just too dependent on Trump's economy. Now, Japan's imports further confirms this collapse. Their inbound shipments of crude oil, coal, and LNG has plunged by double digits. All these are intermediate inputs, and the fact that Japan is buying less shows their factories are in trouble. they're producing less. So Tokyo is now at a crossroads. Trump's tariffs aren't going to disappear. We know that, and for all we know, it could get worse tomorrow. Now, exporting to the US is not a winning strategy anymore. Trump's plan is to shift Japanese factories to American shores, and it's a form of deindustrialization that any sovereign country, whether it's Europe, Germany, or Japan, desperately needs to avoid. And the situation is getting really grave, and Japan needs to find answers to their problems. They are going from a manufacturing powerhouse to a deficit country. The era of trade surplus might be long gone. And we have to appreciate the big flip here. Since April, Japan's overall exports have started to fall. It's one disaster month after another. And I call this the beginning of the end unless Japan does something drastic. Now, as we said, imports are falling, but the trade balance still booked a deficit of 117 billion yen. In other words, Japan is buying more than what they are selling to the world. And that isn't good if you are supposed to be a manufacturing economy. If there's no trade surplus, how are you going to grow and invest back to your domestic industries? Now, usually countries go into debt, they fund their expansion by borrowing money to fuel growth. But Japan can't use the same playbook, can they, without enormous risk? Their debt to GDP is almost 250%, and good luck trying to borrow money without tragedy there. Now, Japan's 20-year bond auction just signaled the worst. Demand is just not there. Investors know that the government probably has to spend more, but demand for Japanese exports are falling. Now, bond yields hit 2.61%, which shouldn't be a surprise. Japan is approaching the cliff and they have to find a way out before the roller coaster plunges all the way to the abyss. It's going to be a very brutal train wreck. And let's rub what's left of our brain cells. Where can Japan turn to? Now, I wonder where. Okay, I think we all know the answer. The only outlet left is China. And considering what is going on recently, there isn't any other economy big enough to withstand the onslaught from Trump. And that's why even India is growing closer and closer with Beijing. Now, Modi just met Wang Yi. As predicted, the moment Trump punished India, there was only one other alternative left in this world. Now, the Indian economy is going to grow closer with Chinese markets. And we can expect more trade, more cooperation, and of course, more de-dollarization. We can agree both China and India are sick of buying and selling in dollars. Now, I want us to remember this image. Japan will be reenacting this playbook very soon. We are going to see Ishiba run all the way to Beijing, Shanghai, Shenzhen, whatever, and shake hands with President Xi. And we have to make a separate video on how Japan can collaborate with China because there are really huge possibilities, especially in robotics and semiconductors. But the fact still remains Trump's trade war is starting to backfire badly. He's reshaping the global order, he's definitely doing that, but not in a way that is ultimately beneficial for the US economy. But let me know what you think. Will the US U turn and hammer China again? And how much longer does Japan have because the clock is ticking? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.